The Construction Market Guide is designed to provide contractors and construction executives with timely data on the economic environment, materials prices, and the labor market so you can make informed decisions that increase profitability. The central bank in the United States controls short-term interest rates through a rate they call the federal funds rate. And they've taken that from near zero to currently where it sits at between 5 and 5.25%. When they historically have raised interest rates this dramatically in such a short period of time, it's typically caused a recession. And that's one of the reasons that we have so many economists predicting a recession in the current environment. But as we'll see as we talk through, things are holding up surprisingly well. If you look at this slide on interest rates, it shows the yield curve, and you could map this in a graph, but we're showing it in a chart form. And you can see the interest rates compared to a year ago and just how much higher they are. We expect that obviously impacts the cost of borrowing for people looking to perform construction projects. And a lot of that's driven off the prime rate or the 10-year treasury. So you can see the amount of increase we've had in those rates in recent times and the impact that's had on the bond market. But what's the impact that's having on materials prices, the overall inflation rate, consumer spending? Let's dive into some numbers. So the first thing we see is that the inflation rate is coming down still pretty dramatically. So it's fallen below 5%. And we'll see some more numbers coming out on that soon as well. But materials prices, most notably here, has fallen off dramatically over the last year, with both oil prices and lumber prices down in the ballpark of 39% over where they were a year ago. So deflation in materials prices. How's that impacting the consumer? Well, you can see during COVID, they saved a lot of money, and you could see the savings rate has dropped dramatically now that people are back out spending and traveling and doing all the things that people were prohibited from doing during COVID. And so now we're seeing the amount of credit card and credit overall increasing dramatically for people. So the amount of debt that the consumer has is going up, but as a percentage of their income, it's still not all that high. On the lower right corner, you can see the chart showing their revolving credit as a percentage of disposable income, and on a long-term basis, it's still pretty reasonable. So the consumer continues to be relatively strong. What's going on with unemployment and wages? Well, here we see that the rate of change of wages continues to be higher than the long-term average, still at about 5%. Now it's falling, so the pay raises that we're seeing right now are around 5% on average as a year-over-year rate of change, but that's coming down, and that's compared to a long-term average of about 4%. The unemployment rate, though, is very low at about 3.7% relative to long-term averages of around 6.2%. So people still have jobs. There's still a lot of positions out there, and people are still seeing wage increases, which is one of the things that's contributing to the relatively strong economy that we still see. In terms of the outlook for the construction industry, we see the Architectural Billing Index has weakened a bit. It's not in growth mode, at least not in the Northeast. It's experiencing some contraction. But construction sentiment continues to be pretty strong. We see the backlogs are fairly stable relative to where they were a year ago. And overall, business continues to be relatively good, although we're seeing some signs of weakening. New housing starts are relatively stable. They've come down a bit and are kind of leveling out at the current where we see them now. And stock prices are recovering. So we're seeing the stock markets looking ahead and expecting a bit of a recovery. So we'll stay tuned and see how things play out going forward, but it continues to be a mixed bag with a lot of economists expecting recession, but the consumer surprising people with just how strong they continue to be. If we can sit down with you and take a look at your finances, we'd love to chat. Please reach out to us. Thanks.